Okay, so we've got to talk about it. We have to ask the really uncomfortable question. Was 2025 just a complete and utter disaster for anyone holding MicroStrategy stock? The year started with so much promise, but man, it turned into this long, painful stress test. So let's get into it. What broke, what changed, and what it all means now. And it all starts with this number. The stock ended the year down about 45%. That is the stark, brutal reality. And that's why we can't avoid asking the tough questions. But here's the thing, the answer is way more complicated than just that one number. If you only look at the stock price, yeah, you see one story. But if you look at how the actual business was forced to evolve, you see something else entirely. And that really gets to the heart of it. There were these two parallel narratives playing out for MicroStrategy all year long, and they could not have been more different. The price story was, well, it was ugly. There's just no way to sugarcoat it. But the business story, the story of how the company's whole financial engine was tested and reshaped, that's actually incredibly revealing. So this isn't about trying to defend that price drop, it's about understanding what was really going on underneath. And this is where it gets wild. Look at this massive gap. Bitcoin itself finished the year down maybe 7%. Meanwhile, you had the broader market, gold, the S&P 500, hitting all-time highs. And then you had MicroStrategy, down 45%. That huge disconnect, that's the real puzzle we have to solve here. Sure, Bitcoin's performance matters, but it doesn't explain that. The root cause of all that underperformance, it wasn't just about price. It was this slow, grinding erosion of investor confidence that started way before Bitcoin even started to pull back late in the year. I mean, just look at this. The stock had 6 red monthly candles in a row. Think about that. That's not a bad week or a quick correction. That is half a year of relentless selling pressure. It was a huge signal that something much deeper was broken. But what's so fascinating is that through all of this, investors never really lost faith in the big picture, the Bitcoin mission. The real uncertainty was about the mechanics of it all. People just got confused about how the company's complex financial machine was supposed to work, especially when things got tough. It kind of felt like they were figuring things out in public. They'd introduce this new MV guidance, a new way to measure value, and then they'd just pull it back. They'd say their ATM program for selling shares was paused, and then suddenly it's back on. They were talking up these new preferred shares as the future of the company, but they just kept on issuing regular common stock. All these little adjustments made it impossible to get a clear picture, leaving shareholders wondering, wait, do we even know what the plan is here anymore? And all that confusion led to this massive shift in how people thought about the stock. It used to be seen as the main event, right? The whole reason to invest. This high-octane bet on Bitcoin. But more and more, it started to look like just a funding tool. The piggy bank they used to pay for everything else. It went from being the goal to being the means to an end. This change in perception had a direct and, frankly, devastating impact on the stock's price, specifically on that all-important premium it used to trade at compared to the Bitcoin it held. And that kicked off this really nasty negative feedback loop. It worked like this. First, the premium shrinks. That means any new shares the company sells hurts existing shareholders more. It's more dilutive. That, in turn, makes investors worry that the company is basically putting a ceiling on its own potential. And when that happens, who smells blood in the water? The short sellers. It just fed on itself. This really captured the whole bear case that was taking over. Prominent critics started asking this very simple, very powerful question. Why are we putting up with all this complexity, all this dilution, when we could just go and own Bitcoin directly? And you know what? It was a really good question. But then, right when the fear seemed to be hitting its peak, the company finally made a move. They did something that went straight to the heart of the market's biggest fear. They announced they were creating a dividend reserve. And this was huge. It didn't make the stock rocket back up overnight, but it completely changed the conversation. Why? Because it took the single biggest unknown off the table. What happens if the premium goes away and they have to pay their bills? And this is how you know what the real problem was all along. The fear started to fade, even while the price was still weak. That tells you everything. The issue was never just Bitcoin's price or the company's debt. It was uncertainty about whether the model would hold up. As soon as the model became understandable again, a lot of that fear just vanished. Okay, so the company passed the stress test. It survived. But that brings us to the final, really critical question. They made it through, sure, but at what cost to the people who own the stock? And this is what was so baffling to so many people. Even after they threw this lifeline and calmed everyone down, they went right back to aggressively selling stock on the market. And they did it when the stock's premium to Bitcoin was at the lowest point it had been all year. Now, from a corporate treasurer's perspective, maybe that makes sense. But if you're an equity holder, that timing was just brutal to watch. So this is really the final balance sheet for 2025. In the games column, you've got more Bitcoin on the books and a financial model that has been truly battle-tested. But the pains column is severe, that 45% stock drop and a lot of eroded trust. And that leaves us with this huge open question. When does all this progress actually start to benefit the common shareholders again? So, if you're looking for the positive takeaway from all this pain, it's this. MicroStrategy, as a company, is without a doubt more durable today. A lot of those scary existential questions that were floating around have now been answered. The financial structure was put through the ringer, and it held up.
In the end, though, durability is just the prerequisite. It's the foundation. But it doesn't guarantee a return for investors. And that's the real tension heading into next year. 2025 was the year they stress-tested the structure. The big question now is whether 2026 will finally be the year that proves the investment case.